Yo, what's going on, guys? Bexio back, and today we've got a brand new video talking about stocks and which one that you might want to get involved in. And you can guess by the title that it is Disney. This stock right now is under $200 a share, which I think is a great deal for Disney. Under $200 a share seems like they're on a great sale. Anything under 200 I think is a good time to pick it up. But with the market the way it is, I couldn't blame anyone if they wanted to pick up tech shares like Apple, Microsoft, you know, those big tech companies that had a huge sell-off. If you want to take advantage of that and get involved in those, I wouldn't blame anyone. But if you wanted to get a stock that isn't going to need to worry about any tech sell-off again and can benefit from the recovery sector and being part of that recovery stocks, Disney is the perfect stock. So Disney right now is $195. When I upload this video, I don't know if it'll be still under 200. Probably will, but it has been fighting that $200 mark for a bit. You know, it's gone over it, fell back under, went over it again, and fell back under today. But I do think that it is a well over $200 stock, you know, at the end of this year. Probably like a $220, $250 stock at least, which isn't crazy. You know, it's not like insane gains, but it is something that once things start to reopen and everything starts to get back to normal, a lot of money will start flowing into Disney. So why is Disney both a tech stock and recovery stock? And the simple answer is Disney Plus, its streaming service, is like its tech sector part. That's where I give it like it's part of tech. And then its recovery is obviously its theme parks. That it was a cash cow for Disney that brought in almost all of their money. And with that being shut down, Disney Plus switched it and brought in a bunch of money for them. So I think with reopening and getting theme parks open to like nearing full capacity and things like that, where everything can start to get back to normal, people start to travel again, go to Disney. I mean, that is a cash cow sleeping right now for Disney. But the real thing people are sleeping on is Disney Plus. And I didn't think that I would be talking about Disney Plus again because I originally started getting into Disney shares around $100, around 103 actually. But that's when I started buying Disney because of Disney Plus coming out and people not willing to price Disney Plus in. So when you just compare Disney Plus to Netflix, you can see Disney Plus has 94.9 million subscribers, and then Netflix globally has 204 million. So Disney Plus is almost half of Netflix subscribers, and it hasn't even been out for a year yet. That is massive. When you're talking Netflix, like the streaming king, and Disney Plus is already half of it, they are taking market share and making sure that people love Disney. Like there's no downside to Disney Plus. People love Disney, and the diehard people will pay for a streaming service for just Disney shows and movies and all that stuff. So combining a Disney Plus with almost 95 million subscribers and a theme parks reopening across the world, really, but mixing those two together, the revenue that's going to come in is going to be massive, and I think it is completely undervalued, both in the stock price and in what they're going to bring in once things start reopening. So, I mean, we can see from their earnings report, you know, for the earlier part of 2020, they were missing their expectations. You see the first two, or the first one they missed by a good amount, second one barely beat, third one barely beat again, and then they missed. And then they started when Disney Plus started coming back, or coming up and starting, they started making revenue again, started absolutely beating expectations, and never actually started losing money. So that's huge because a lot of people thought Disney would be deep underwater without theme parks, and Disney Plus saved that ship. Now, Disney Plus is massive and brings in a lot of money, and I think that over the next few years, it's only going to get bigger. People are only going to start going more to Disney Plus. You know, the hardcore people are there, and then the people who want to watch Disney movies here and there, or Disney shows, or maybe it's something for kids and things, and they want to get Disney Plus so that they can just turn something on and know that it's kid friendly. So with that expansion, and it's already at half of Netflix's subscribers, I think that it could challenge Netflix as the #1 streaming service. And once it gets to that level, it's going to be making so much money. The theme park's going to be open. They're going to be making so much money. Disney's just going to have a ridiculous amount of money coming in that people aren't expecting. And I think they should be pricing that in, but it's definitely not being priced in right now. I mean, you can see Disney for the last year up about 80%, which is a great year. And I think with things recovering, because tech is always going to be going up and always going to gain value because that's just what tech does. There's going to be sell-offs like we've had, but overall it's going to be an upward trajectory. But Disney, I don't think we're going to see a sell-off in Disney like we have in like Apple and the FANG stocks and all those. And I think that there's a good chance with Disney we see another 80% year. If things reopen, theme parks get up, Disney Plus is still making a ridiculous amount of money. It's just like a no-brainer that Disney's going to have so much cash, it's not even funny what they're going to be able to do. So price targets for Disney at the end of this year, another 80% year would put them at like $350 a share. I don't think they're going to go that high, not in 1 year. I do think that without a doubt, it's a $250 share stock at the end of the year. I think anything under 200 is a steal and a bargain. 220 is like the conservative guess that I would put for a price target for Disney, and then 250 to 300 because of reopening plays and people rotating money into recovery stocks and reopening stocks, and Disney fits that bill while also holding on to a part of the tech sector. So I wouldn't be surprised to see Disney hit $300 a share, and I think they can, but that's like a best case scenario in 1 year. Definitely over like 5 years, this has a potential to be $1,000 share, you know, if they continue to dive into tech and expand Disney Plus and expand their streaming services and get into that type of stuff. Then Disney has so much room to grow, and that's the best part. And with them being a blue chip stock, you don't have to worry about, you know, them not being reputable or worry about them going bankrupt. And the time when people were worried about them losing money and not being able to sustain themselves, they figured out a way to do it with Disney Plus. And a lot of the market counted Disney out, and they weren't. They made a ton of money. So they're a great company that is just always innovating, and when their back's against the wall, they figure it out, and that's what you love to see with any company you're investing in. So that's going to do it for this video about Disney. I am super bullish on Disney. I really do like them, and I've held their shares for well over a year now, so Disney is still a great buy here. I think that we are in for a great year with Disney, and I think still a decent year at least with stocks. I think it'll be turbulent for like maybe a month or two. It'll be a little tough in the market, especially for new people getting in or people watching their portfolios be butchered right now. But that's how the market goes. It has ups and it has downs, but over the long term, it goes up, and that's why you need a long-term outlook, because the stock market over a 20-year period has never returned a negative rate. So guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.